The Boom 500 index market is more volatile than the Boom 1000 index. This means that the market can rise quickly more than the Boom 1000 index. So there's no need for longevity in this market. So scalping and cashing spikes is the best method to trade this Boom 500 index to be more profitable and successful, right? So now I'm going to show you how you can trade the Boom 500 index and be profitable on the market, right? So firstly, we're going to enter into the Boom 500 index market on the chart right now. And I'm going to show you that you can see that there's a lot of spikes on this market, right? Because what we're seeing here is a spike, right? So we're seeing a high rise in market volume for the Boom 500 index. Just as we see right here, there's a lot of spikes on the market. All right, now like I said, you see on here that on the chart, on average, one spike occurs in price series every 500 ticks, right? While if you go to Boom 1000 index, you will see that on average one spike occurs in price series every 1000 ticks. So this means that it will take 1000 ticks on average for a spike to occur on Boom 1000, while on Boom 500 it will take every 500 ticks, right? So these are the ticks on the market. Just as you can see, these are the ticks, these are the candle ticks on the market, and this is the spike. So what I'm saying here is that on average a spike would occur every 500 ticks, right? We know that that is not how the market is, right? Now if you scroll right here, you could see that this market sold for a particular period of time, for a long period of time, before a spike occurs. So meaning that they're just giving you an estimate, right? But you see what I'm saying, that spike comes in quickly on Boom 500. Now scalping and cashing spikes is one of the best strategy and method you can use to be profitable on Boom 500 index. These are one of the best strategies you can use to be profitable on Boom 500 index. I'm going to share with you few indicators and way you can use to trade this market successfully. You can use the RSI, you can use the MACD, you can use the average true range, you can use the moving averages, you can use the stochastic oscillator to trade, you can even use the market facilitation index to trade this market, right? But we're going to go with a simple indicator that I'm going to share with you guys that you can use to trade this market and be profitable on the trade. We're going to use just 3 indicators for this strategy. I want to put on the moving average first on this market. The moving average on period 200 shifts 0, then the method is exponential, right? You apply to close, you put the style on 2 pixel, you use the color purple right here, or you can use any color of your choice. Then you use on the straight line pattern right here, then you click on done. All right, now we know that the moving averages help us to see the flow, right? The flow of the market, right? If the market is going upwards or if going downwards. Even without the moving averages, we can tell by ourselves by just studying the market. We can see how the market moves, right? But with the moving averages, we can clearly see the price movement, right? We can see. So we're going to add in the RSI indicator. So these indicators that I'm sharing with you are the simplest indicators you can use to be profitable on this crash 500 index market. Now the RSI, we're going to put it on indicator window 1. I'm going to choose on the RSI, which is the relative strength index. Put it on period 12 while we apply to close. The level is going to be on 90 and 10, right? The level should be on 90 and 10. Then you put it on 3 pixels. The color should be on blue, or you can use any color of your choice as long as you know what you're doing in the market, right? As long as you can trace these colors on the RSI. So we're using blue right now, right? And we're using this first line here, this one. Then click on done. All right, now we can clearly see the chart clearly, and this is the first zoom, and this is the RSI, right, on Boom 500 index alone. Now we add another indicator, which is the MACD indicator. All right, we'll put it on the fast EMA. You can see the setup right here, 13, 25, and 10, while we apply to close. Then the time frame should be on all time frame. The color of the style is going to be on black. The color on the style should be on black and not any other color. You put on 3 pixels. The signal is going to be on red and on 3 pixels. You use the straight line pattern. The pattern of the line has to be straight. All right, so that you can see the chart clearly. Then we click on done. Now I'm going to explain what you need to avoid in this market as well, right? I'm going to explain the parts which you need to avoid when you're trading the boom 500 index. So I want you to pay close attention to what I'm about to share with you right now. Okay, I want you to pay close attention. So you see that most times when we trade, we use the MACD and the RSI to trade crash markets, and we use it to trade boom markets. But the strategy we use are different, right? You may think that, all right, this is the same setup, right? But these two markets are different markets. The position whereby the markets rise on boom is not the same position whereby the market drops on crash, right? On the crash market, the spike drops downwards. On the boom, the spike rises upwards, right? And this is the MACD right here, and this is the RSI. So the RSI function is for us to see the level, which is the overbought and the oversold levels. So if you take a closer look at this market right now, right, what we're seeing here is a lot of rise in price. We're seeing a lot of rise in price right here. These rises are the spikes on the market, right? If you take a look at this point right here, you see that there's a spike here. There's a spike on this market. This market is highly volatile. So like I said, right, each 500 ticks, one spike occurs after 500 ticks, but that is not always how the market is, right? So we can see in a position whereby the market has been selling for long, there's no spikes, right? So there's a position whereby the market can go like that, but the chance is about 20% chance, right? So when you're in this type of market, all you need is just a few candle ticks and you are out of the market, right? Unless you have a big account, right? If you have a big account like $1,000 account or $500 account, you can trade this market without bothering about having too many losses on your trade, because when the market crash, you still have a lot of capital to sustain you to make back those losses you have made on your trade, right? So right here, guys, what we're seeing here is that we're seeing a highly volatile market, a market that has a lot of spikes. So this is the MACD right here, right? This is the MACD of this indicator, right? And we're seeing a lot of spikes. If you take a closer look, the spikes comes in at the uptrend of the MACD, right? The spikes come in at the uptrend of the MACD. This is the MACD right here. This is the spikes during the uptrends of the MACD. And when price gets to this point, the market will always sell a little bit. All right, the market would sell a little bit, meaning you can scalp the market taking few candle ticks. You can take 4, you get 3 candle ticks from this market. All right, and when you're taking those candle ticks from this market, you want to exit after each candle tick if you have a smaller account, right? So 80% of traders trading the crash and bull market, their accounts are from $20 to $100 account, right? 80%, yes. Most traders trading the crash and bull market don't have big accounts, right? That's why you see most people always ask, how do I grow my small account on crash and boom? How do I grow my small account on crash and boom? So I'm showing you guys right now that this strategy, you can use it to grow your small account as well, right? So you take these candles, when you place a sell on this market, you scalp this market, you close your trade each, or you can decide to take 2 candle ticks each, right? After 2 candle ticks, you close the trade and you close your profit. You take the profit. So when you take the profit, you wait again until you see a good opportunity, then you place another sell. So if you follow this strategy over and over, within a day, a goal which you have set, you would meet that goal, right? Let's say you have a $20 account right now, a $20 account, and your goal for that day is to meet $100 account, right? Or let's say you want to turn that $20 into $50 account, right? You want to go with the smallest lot size as possible, right? Let's go with 0.2 lot size. A 0.2 lot size, one candle tick should give you about 10 cents on the market, right? Let's say 10 cents on the market. each candlestick for 0.2 lot should give you about 10 cents, right? So if you are able to successfully get up to 5 candlesticks, that will be about 0.50, should be 50 cents to the market. 5 candlesticks successfully, and these candlesticks which you have got from the market, it shouldn't take a lot of time for you to get 5 candlesticks from this market if you follow the right strategy, if you follow the right analysis on the market, just like I'm sharing with you guys right now. Yeah, you see here that I just told you guys, if you are trading the bull market alone, let's say the boom 500 index market, when the MACD is creating an uptrend, this is a simple strategy that I'm sharing with you. When the MACD is creating an uptrend, do not enter into the market. That's not a good opportunity for you to sell the market, but it's an opportunity for you to buy the market to catch a spike. You can see here that this is the uptrend of the MACD at this point. The spike came in, the spike came in, the spikes, the lot of spikes, as you can see. So you can decide that you have $20 account using the lowest loss side of 0.2. You can decide to risk about 5 candlesticks from the market just to catch spikes during the uptrend of the MACD. All right, now that 5 candlesticks you are risking, that should be about 50 cents to the market, right? Because you are cashing the spikes, right? You are cashing the spikes. You are not selling, right? You are not selling. You are cashing the spike, means we are buying the market. All right, is when you sell the market, and the spike came in, taking away all your profits, and you will end up getting a margin call. So if the spike came in, taking away all your profit, that could also affect your balance, right? So if you are on the uptrend of the MACD, if you're in a position right now and you use a setup like this, which I just shared with you, and the MACD is an uptrend and you want to catch spikes to grow your account, you are risking just 5 candlesticks on the market, which is 0.50 cents on the market, using a $20 account. All right, so you place a buy, and the spike that comes in gave you 10 candlesticks. That should be $1 profit from that market. All right, that should be $1 profit. And if the losses you have made for that market was 50 cents loss on the market, the profit which you have made is 50 cents, because you need to minus the losses from the market. Using that 50 cents to balance that losses, then your main profit is going to be 50 cents from the market. You see, the total profit was $1, but you made losses because you took a buy. So 5 candles was taken away from the market, and now you have gotten just 50 cents profit from this market, right? And that's a good trading experience, and that is a good winning trade, right? So you bought the market and you got 10 candlesticks when the market spikes. All right, when the market spikes. And remember that those losses that you made on the market took just 5 minutes. All right, just 5 minutes of trading time. After the 5 candlesticks loss, the spike came in, giving you a profit of 10 candlesticks, which the profit was 50 cents, right? 50 cents total profit you made. The total profit you made was $1, but you used 50 cents to balance the losses which you have made. So you spend just 5 minutes on the market to make 50 cents profit. Then you look for another good opportunity to place a buy again to make another 50 cents. All right. Now, at the end of the day, if you follow that same strategy and pattern, you can end up having a $50 account for that day. All right. And we also know that patience is the key. So with patience can help you, right? If you have patience, you're checking the market time to time, keep following this particular strategy that I'm sharing with you, you'll be able to turn that your $20 account into $50 account by the end of that day, even more. All right. Now, at the downtrend of this MACD right now, you can clearly see that this is the downtrend, right? This trend started from here. All right, it started from this point downwards to this point. Right now, this is this point here. It ended at this point here. Now, if you look at this market right now, from here, if you count, there are only how many spikes? 1, 2, 3, and 4, right? This is a spike also, but the market bought and the market spiked and it dropped. This is a little spike, but we won't count this one as a spike. So we'll start from here to this point, giving us just 4 spikes in this market, right? And we can see that the spikes that came in this market are not big, right? Are not big spikes. All right, now when the market starts giving a downward trend of the MACD, it's a good opportunity for you to place a sell and scalp this market. All right, it's a good opportunity for you to scalp the market. All right, but you also need to watch where the market position is. That's why I said price action is always needed. It's also needed in this strategy. You combine price action together with these indicators to trade. All right, then you check the 1 hour time frame. You go to your 1 hour time frame right now. What we're seeing here is that this market has sold. This is how you check. You check that this market has been selling. All right, and we see that this market is at the overbought. So whenever market gets to the overbought, the market will always sell. All right, the next step is for the market to sell, which means the market has sold now. It's selling now. It's going to sell because this market has bought. So I hope you understand what I'm sharing with you guys. All right, I hope you understand what I'm saying. Take a look at it. Take a look. This is the downtrend. The downtrend, the market sold. Right? Market sold. And when you start the uptrend, the market is buying. These are the spikes. Spikes at the uptrend of the MACD. All right. So I hope you found value in this video that I've just shared with you guys. Once you want to scalp this market, you want to take a sell for 5 candlesticks. All you need is when the MACD is creating a downtrend, you go into the market, you place your sell, you take just 5 candles. All right, and use good risk management. If your mind tells you this market is going to spike, exit the market because that market will spike. All right, take a look at this. The downtrend, no spikes until this point. So when you start creating a downtrend, you take your sell. Right here, you take your sell immediately. You start creating a downtrend, you take your sell for 5 candlesticks. 1, 2, 3, 4, 5. This is a small spike, right? Then here again, you start creating a downward trend. You count your 5 candlesticks. Here, you count your 5 candlesticks. Simple strategies to grow your account. All right. So guys, I believe after watching this video, you now understand how to trade the Boom 500 index market successfully. Remember what I said? The Boom 500 index, the market spikes a lot. The market is highly volatile than Boom 1000. All right. So you need to be extremely careful on Boom 500 index market because this market can drop at any given point. So if you found value in this video that I just shared with you, do well to like and subscribe to this channel, Daily Forex, for more awesome trading tips and strategies. I will see you in the next video.